Tobias Levkovich, Chief U.S. Equity Strategist with Citigroup. And we're pleased to have him join us on set today. Great to have you.
Thanks for having me.
Okay, so the title of today's note, Tobias, the short-term bear stories, flimsy legs. So you're feeling a little more bullish, at least for the short term. Why is that?
Well, we've been saying for the past several weeks that we thought markets would be moving higher. Our valuation criteria was in pretty good shape. Our sentiment monitors, what we try to track not our earnings expectations, what the implied earnings expectation are for market levels. All these things are fairly bullish. And I think investors have been focusing on a lot of the wrong data to continue with what I would call deep skepticism.
What kind of wrong data?
Well, let me give you one example.
If you're trying to investigate
Sure.
or learn, educate yourself to make investment decisions.
Well, one of the data points that's been cited a lot, and we were getting a lot of questions about it last week, was a liquid asset ratio set of data from the Investment Company Institute on mutual funds, and how much cash as a percent of the portfolio do asset managers have or fund managers have? And that number as of January, because the latest data we had, was 3.6%. That's down from about 6% the prior year, and this is one of the lowest numbers on record. Some people said, okay, everybody's fully invested, they're all in. Only one problem with that data, at least one. 80% of that ratio's decline is the market's rise. In other words, it isn't that you've taken down a lot of cash, it's the denominator of the ratio that's gone up. Now, to be fair, cash is down about $23 billion year over year, but there's still $7.75 trillion of cash on the sidelines.
Again, and that's where I was going to go, because yeah, you see that drop, but as people have told us from the beginnings of this, what Mr. Bernanke called nascent recovery, that there's still a ton of money just waiting. What are they waiting for?
Well, I think they've been hurt twice pretty badly in markets. They've lost over 50% of their money two times, once back in 2000 through 2002, and again, from the highs in 2007. So they're kind of burned twice and very shy.
You're not going to burn me a third time, right?
Exactly. I think it's going to take some time. We're going to have to wean them back in the market. Dividends may be necessary, or an increase in dividends to give them an offset to income they're getting, and not that much, but some income they're getting, at least in their fixed income investments.
And Paul Krugman wrote about the liquidity crunch that he sees the U.S. in because our rates are already near zero. Obviously, he was writing against the context of China. So is that a factor?
Well, we can fund ourselves if we have to. I think well, I didn't see the article that you're referring to by Professor Krugman. I'm certainly aware of the discussion around that. We're very, if you like, reliant on the Chinese, the Japanese to buy our paper. With that much $7.75 trillion sitting in money market accounts, savings accounts, and bank accounts, we could be buying treasuries ourselves and be easily self-funding. I think that's not well understood.
Well, you mentioned the Chinese buying our paper. How long will they continue to do that if they feel that we don't have our fiscal house in order? They're watching the politics here. They're watching the Dodd regulation, the financial regulatory reform.
Well, I think I'm going to leave the discussion about politics on the sidelines, even though I'm tempted. As a Canadian, I don't think I should really comment on U.S. politics. But
easy out.
Exactly. But I think, I was in China in December, met with a lot of officials there from various groups, and the Chinese understand that they need at this point a stable dollar, primarily not because of their ownership of $755 billion rather of U.S. Treasuries, but more because they really need the exports. One of the things they're doing on monetary tightening is because their exports to us have been going up as consumers have recovered.